Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi guys, this is Aditya Vora here. Hope all of you are doing well. Back in 2013, I was a shareholder of this company called Strides Arcolab, which at that time was a good quality pharmaceutical company. In fact, amongst the top mid-cap pharma companies during those times. A news item popped on my screen which read Strides declares a one-time dividend of rupees 500 per share. If companies like MRF give you a dividend of rupees 500 per share, I can say it is understandable. But how on earth can a company whose share price at that time quoted rupees 875 can give you a rupees 500 per share dividend? Well, the reason for this special dividend was on account of sale of its injectables unit called Agila to pharma giant Mylan for a consideration of $1.75 billion. And that was the lottery. The management returned 88% of this cash to the shareholders as a one-time special dividend. For a shareholder, when you get 60% of the stock price as dividend, it is one of the best feelings anyone can get. Now, obviously, I didn't anticipate such an event to happen. But on a sale of a division for rupees 8,000 crores or $1.75 billion, the company had two options: either give a big dividend or go for an organic acquisition. It was the smart move that the company chose the dividend way. This entire event which I narrated is called special situation investing, where one of the reasons in investing in certain stocks is if you can anticipate an event. The only contention to invest is not because of a special one-time event, but also because the event which we are anticipating to happen is likely to add value to an already strong company. So friends, in this video, let me talk about a company which is a combination of a fundamentally solid company, B, its products enjoy sizable market share, and C, it is a part of a strong conglomerate with best corporate governance. And also the most important thing, there is a special situation angle to it. The company I am talking about is TTK Healthcare, part of the prestigious TTK group, which is known by its prestige brand of cookers, India's leading kitchen and appliance brand. Let me start with what the company does in a brief and how it can be a candidate of special situation investing. So, TTK Healthcare has multiple business divisions which ranges from animal welfare products, consumer products, medical devices, protective devices and foods. Let's start with the consumer products division, which accounted for 36% of revenues in FY22. The consumer products division, which is a B2C business segment, has some leading consumer brands under its umbrella. TTK Healthcare, under its brand name Woodward's Gripe Water, is a market leader in Indian colic market. It has been marketed in India by TTK since 1928, and when it comes to baby care, it is a household name amongst mothers. In fact, in 2022, the company reached an all-time high sale for its Gripe Water brand. Secondly, the famous female deodorant brand Eva comes from the stable of TTK Healthcare. In fact, very few people know that TTK through Eva deodorants was the first to launch a range of no alcohol skin friendly female deo in this country. Along with deodorants, the company also has a home care brand under the name of Good Home, which has expanded from a single product in 2007 to 6 categories, which include scrubbers, air and room freshener sprays and cakes, odor remover sprays, drain cleaners, kitchen and appliance cleaners too. The USP is the distribution, especially in the southern part of India. In fact, the company is actively looking to increase its market share in the northern and the western part of India, along with pushing its products to the e-commerce range and the modern trade and supermarkets. This division grew by 24% during 2022 and is poised to continue its momentum going forward. Now, the other important division of this company, which in my opinion TTK Healthcare is a pioneer in, is the protective device segment, which includes condoms and allied products. In fact, TTK Healthcare was the pioneer in getting protective products in India by forming a joint venture with London Rubber Company and manufacturing Durex and eventually creating the Kohinoor brand. However, a change in ownership and battle led to Reckitt Benckiser getting control of both the brands while TTK Healthcare was left with the manufacturing units. It eventually created the Score brand and is ranked among the top 3 in its segment. This division of protective segment devices contributed 22% of sales. So friends, these two divisions, which is the consumer products and the protective device division, contribute to 55 to 60% of revenues. The remaining 40% of revenues is divided between animal welfare division, the foods division and the medical devices division. Just to give you a brief, the animal welfare division accounted for 17% of revenues and includes pharmaceutical formulations in various therapeutic segments and feed supplements. In fact, this segment grew by 27% in 2022. So now 16% of revenues for TTK Healthcare come from a product which most of us have tried and relish while having it, but don't know who makes it as it is in an unorganized market. I am talking about fryams and papads which all of us love to have. In fact, a major portion is exported while the domestic brand Fryams is strong in India and has created a category for itself. Lastly, the company also manufactures medical devices which is heart valves. In fact, TTK Healthcare manufactured and distributed India's first indigenous heart valve prosthesis. It's the first Indian-made heart valve and one of the most affordable heart valves in the world. While revenue from the heart valves accounted only for 3% of total revenues, the company has made strong progress which is likely to increase contribution from this segment. It has signed an agreement with an overseas manufacturer for direct import and distribution of bi-leaflet valves and has received regulatory approval also for the import. Also, the company is in the final stages of signing an agreement for manufacture and supply of cardiology products like PTCA catheters and coronary stents. Along with heart valves, the company also has an orthopedics division which accounted for 6% of total revenues and has a portfolio of joint replacement products. So friends, this was the company in brief. I believe all divisions have a strong position in the market and are backed by tailwinds in the respective subsegments. If you take individual businesses like the medical devices business, which barely accounts for 9% of revenues, it has massive tailwinds as the central government is implementing a massive medical insurance scheme to cover poor families, which in turn will increase the demand for medical devices like stents and joint replacements. Also, if you look at the protective segment, there is no reason this business can have recession. Besides, the company is winning export orders to supply protective devices to countries for a contracted period of 3 years at least. It has also tied up with United Nations and other organizations too. My point is very simple. At least 50% of its business is self-sustaining and consumer-oriented, which enjoys a high valuation multiple. Now let us come to a development in my view which is the most important development in the history of this company. This can potentially be a special situation event. So in May 2022, TTK Healthcare sold its human pharma division for Rs 805 crores to BSV Pharma Private Limited. Now this is a huge step and brings massive amount of cash flow to the company. The human pharma division accounted for 25% of revenues of TTK Healthcare with a turnover of about 160 crores. Also, the gain on the sale of this human healthcare division came to roughly rupees 765 crores, which is massive. So, let us look at the contours of this deal to figure out what opportunity lies for us. The deal was set up in such a way that TTK Healthcare got 74% of the sale consideration as cash, which amounted to roughly 600 crores, and 26% in the form of equity shares of BSV Pharma, which amount to roughly 200 crores. You know, the other shareholders of BSV Pharma are Bharat Serums and Edward International affiliate. Bharat Serum is the vaccine manufacturer which saved all of us in COVID. So, as on September 2022, TTK Healthcare has a cash on the books of roughly 742 crores, 600 crores which it got from the deal and 140 crores which it already had on its books before. And it also has an investment of roughly 200 to 210 crores. That is a accumulation of 950 crore rupees of cash and investment on the books as of September 2022. Now hear me out. The market cap of this company as of today stands at roughly 1400 crores. So 50% of the market cap is purely cash, while if you include investments, roughly 70% of the market cap is in the form of cash and investments. So let us see the implications of the above. The first component is cash. Now I am sure the company will either give a hefty dividend or invest the surplus cash in some acquisition or maybe organically invest in its current business. Thereby, all of this will enhance return on capital employed. The reason I say this is because historically the company has generated a 10-year ROC of roughly 12 to 15%. A lot of times, if the management is not up to the mark, the excess cash, if not given in the form of dividends, can be a threat too. I remember the company Just Dial at a point in time many years ago had a cash as a percentage of market cap of roughly 50 to 60%, but wrong decisions by the promoter eventually burnt all the cash. I believe this risk is very limited when it comes to someone like TTK Healthcare and the TTK group in general. The second component, which is investment in BSV Private Limited at rupees 210 crores today, is at cost on the balance sheet as per accounting. I am sure this investment's market value will keep on rising, and maybe some years later, if the company, which is BSV Pharma, decides to go public, there will be a massive value discovery for TTK Healthcare. So friends, to end this, while special situation makes investment in TTK Healthcare attractive, we are also talking about a company with strong fundamental parameters. Parameters like high ROE and ROC provide the much needed comfort. You seldom find such good companies with cash to market cap at 50%. So friends, thank you for watching the video and do let me know your views.